Hi, I'm Tom Elliott and welcome to another financial markets update for Hodges Real Estate. Well, we're in a very strange time in financial markets at the moment. For those of you history buffs out there, it's a bit like the phony war between 1939 and 1941 in World War II. Lots of potential action, but not a great deal actually happening. Well, let's go through what has, or in some cases hasn't happened. Now, first, the Reserve Bank left interest rates on hold for the second time this year in early March. Now, only a week or so after they did this, local unemployment data came out and it wasn't all that good. It seems that unemployment has started to rise around Australia, particularly here in Victoria, where it's coming in at around about 5.5%. Now, the Reserve Bank is and should be very sensitive to changes in unemployment. While its main goal is always the suppression of the rate of inflation, keeping a decent rate of employment or unemployment is another very important goal of the Reserve Bank. My view is this: if unemployment goes beyond 5.5% into the high fives and possibly towards 6%, and I think there's every likelihood, unfortunately, that will happen, the Reserve Bank will have no choice but to start cutting interest rates again. And another thing that the Reserve Bank needs to do, and I think it's aware of this, is look at the very high value of the Australian dollar. Anybody that tries to export to the outside world is finding the going extremely tough at the moment. And once those jobs in manufacturing are gone, chances are they'll never come back. So the answer in both cases is to cut interest rates. Now, let's say I'm right and the Reserve Bank does start cutting interest rates again, as it did late last year. What does that mean for all of us? Well, the big issue will be, and this is what will dominate talkback radio, is whether the big banks decide to pass on those cuts. Now, the ANZ Bank now has a stated policy of not following the Reserve Bank. It actually says on the second Friday of each month, so after the Reserve Bank has made its announcement, that it will make its own announcement about interest rates and that it may or may not have to worry about the Reserve Bank does. So in a sense, the ANZ Bank now makes the monetary policy for Australia because the other big banks sit back and watch what the ANZ does. So, if the Reserve Bank cuts, I reckon do this. Whatever the Reserve Bank cuts by, chop it in half. That's probably what the banks will give you. So if the Reserve Bank cuts 0.5%, which I think is entirely possible in the next few months, you'll probably see 0.25% or 25 basis points handed on to borrowers. And of course, if you're someone who has term deposits, you'll probably see the full 50 basis points chopped off your term deposit rate. So what about the international situation? Well, as always, there's good and bad news. The good news is that the European Union got its act together and bailed out Greece. Now, this does not mean that Europe will not go into recession. It probably will. But the recession is unlikely to be as bad as it would have been had essentially the euro fallen apart. Trust me, Greece only has about 10 or 11 million people, and it's taken every bit of financial resource that the European Union had to bail it out. If one of those bigger economies needs a bailout, well, the money simply does not exist. So that's why so much effort went into Greece. So good news from Europe. Bad news, however, we have to go a bit further east to the Middle East. And just quietly, you know, Iran and Israel are just rattling their sabres at each other. And for those of you who watch the oil price, or indeed the local version, which is of course petrol and LPG prices at the service station, they have stayed resolutely high in recent weeks. So even though we've got a world which isn't really growing all that much, it will go up if Iran and Israel come to blows. I'm hoping they don't, but that's the reason oil's expensive. It's also the reason petrol has stayed expensive. And as a result, motorists are very upset. So what about the property market? Well, I feel like I'm sort of saying the same thing over and over. Obviously, if the Reserve Bank cuts rates, then that will be good for property. Interestingly, at the start of the selling season, which has come out of hibernation since the summer holidays here, there has been an improvement of the clearance rates the last few weeks, over 60%, which is a sign of a reasonably healthy market. So if you're an investor, it means you can probably buy with the confidence that the market is not going to go down anymore. If you're a first home buyer, as always, if you find a place you like and you can afford it, then chances are you should probably have a go at it. Now finally, just a word on interest rates. So much focus is on the variable rate of interest and what the Reserve Bank does and that sort of thing. Right now there is a gift out there in the interest rate markets, and I think it's one that people should look at very seriously, and if it makes sense to you, grab it with both hands. Because about 6 to 9 months ago, bank funding costs were a fair bit lower than what they are today, there is still some fixed rate 2 to 3 year money available from the big banks in the very low sixes. Now, for a while the ANZ Bank was offering 2-year fixed home loans at 5.99%. That's now gone to around 6.2, 6.3. I reckon if you can get a 2 to 3 year fixed rate loan at around 6%, 6.1, 6.2, it is very well worth looking at. Even if the Reserve Bank cuts rates, I don't think these low fixed rates will last very long. It's not a piece of advice, just something to look at. Anyway, that's it for another financial markets update. I look forward to your company again for Hodges Real Estate next month.